Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Man, I had another debate with had been about 4 or 5 people, and they're talking about gold versus cryptos. And, again, I get it. Crypto people that are dedicated and loyal, they're not going to say anything different, despite the fact that their damn market lost 70% of its value. They jump all up and down talking about, it'll come back. It did in the past. It'll do it again. And I understand that argument. I get it. I do. But let's go over in detail why that might not happen. Before we get started, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, head on over to our friends at Money Metals Exchange. The link will be down below in the description. If you are a first-time buyer and you spend more than $100, use promo code PIMPYSILVER. Yes, it has changed. PIMPYSILVER. So if you're watching this video and it's an older video, make sure you check on current videos, because the code is going to be changing from time to time from now on. Also, I can be found on other platforms. Everybody knows I have my own website, Pimpy's News Network. Over here, I post videos that I can't get away with over on YouTube. Also, I have a group on Facebook called Pimpy's Investment Chat. Over here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. Come on over here and join us. It's free to do so. You can also come follow me on Twitter, MeWe, YouTube, and Odyssey. The links for all these platforms will be down below in the description. So for whatever reason, if I get removed off of one platform, you could find me on the others. So a couple of things. In talking with a Bitcoin lover, I always get that lecture about, Bitcoin hasn't increased blah, blah, blah % of value. So it's still new in the game. Let's review a couple of facts about Bitcoin. You see, it doesn't make a difference how much the value of any crypto, but let's go with Bitcoin. It going from zero on up to $68,000, $69,000 in a matter of X amount of years. Nobody cares about that. It doesn't do anything for anybody who was not there from Jump Street. If you weren't there buying Bitcoin at 10 cents, then it doesn't make a difference. Nobody cares. But the one thing about Bitcoin and other cryptos, even though they did accumulate a lot of growth in a short period of time, well, gold has never lost 70% of value in a matter of a couple of months. Not ever. It has 6,000 years of history. And I get that, but I can go anywhere in the world and with my Bitcoin, and I can go anywhere in the world I want with my gold too. You can't carry too much of it okay, I get that point. I get it. But a couple of things. If you are somewhere and the power goes out, you're screwed. If for whatever reason somebody hacks your coins and takes them, you're screwed. And I know you're going to sit here and try to give me all kinds of lectures about what it is you could do to protect yourself. You're missing the point. If you get hacked is what I'm saying. Third is the government can confiscate your cryptocurrencies. And I know you guys like to say, well, they can confiscate your gold. Well, they could say they're confiscating, but there's a difference from being actually able to do it with a flick of a switch on your computer versus the government has to confine me and then take my precious metals. They confiscated gold back in the 30s. And I was just shaking my head. I said, look, confiscation was announced, but they weren't like going door to door, checking on people. Most of that was given up voluntarily. People gave up their gold without much of a fuss. But there was a very large group of people who absolutely didn't turn it in. You see, the government could say they want to confiscate gold and precious metals all they want. Unless they show up at your door, it's not going to happen. And even if they did, most people are smart enough not to say anything. Or at least hide it somewhere where it can't be found. And then what ends up happening is you just become really sneaky about how you use your precious metals. Like I said, you want something outside of this system. If the system all goes to the central bank digital currency and they want to confiscate gold and silver, that's why it's very important to deal with your local markets and talk to the bosses there and see if they'll deal with you with gold and silver. Most of my people in my neighborhood will do it. And they'll set the price. They don't care. And what I mean by that is if the government tries to act like gold and silver has no value and they try to drop the value down, we will determine collectively as a group on what the value of gold and silver will be. If they want to confiscate your cryptos, they can. They've done it before. People were hacking and all this other stuff. They've been caught by the police. And how do you suppose that is? Because there is no total anonymity. Anything and everything that's on a website, they know. So a couple of things. If the government wants to end crypto, it's real simple. All you have to do is pressure the exchanges. We've already seen that happen. These people will cater. They will give in. If they need to give up all your cryptos, they will. Don't forget, when you sell your cryptocurrencies, they're linked to a bank. So when you go to sell them, guess what happens? That money goes right into your bank account and boom, you get caught. So if you have a blackout, if you get hacked, if the government truly wants to confiscate, we know you're going to get nailed there in the bell-end, unlike gold. And although you say I can have it on some type of platform in which the government can't touch, you'd be surprised what the government can do. I'm sure once they find out where the locations are for all exchanges and they tell them shut it down now, guess what's going to happen? You got it. They're just going to shut everybody down. See, that's much easier to do than trying to go door to door for every neighbor trying to get their gold and silver. But again, I don't want you to misunderstand what I'm saying. I don't trust cryptos, and I haven't for a long time. I gave my list of complaints out why I didn't trust them, and then watched over the next 2 years all my concerns played out in real time. All of them, one after the other. That's why when I say if you're going to deal with cryptos, do like I did, and make sure you have discretionary funds. In other words, if I lost all my crypto today, it's not going to change my life. You get where I'm coming from? Now, it would be nice to see something like Bitcoin and Ethereum go hand in hand with gold and silver, and the governments recognize it. You know what I mean? And it's real legal. There's a lot of transparency there. That would be nice, but that's not going to happen. So crypto started to make a little bit of a run, and they have been stagnant ever since. We're looking at Bitcoin back down to $23,851. Ethereum at $1,649. XRP is at 38 cents. Cardano's at 38 cents. Polygon's at $1.34. Dogecoin's at 8 cents. And look at Hex, as usual, being crazy. It was at 4 cents, but it's now at 6 cents. Solana is at $23.89. Polkadot is at $7.01. Shiba's at 4013. And Litecoin's at $94.05. Now, I don't know what the heck's going on with Terra Luna Classic, but it is at 30169. You can see that huge spike that just happened, but it's up 3%. As long as it stays up there and continues to go, I'll be a happy camper. Saitama, once again, started to make a big run back up there, and then boom, there's a nice little cliff, and then it just boom, dropped down, went back up, and then now we're starting to regain just a little bit. It's looking a little crazy, but it is down 1.26% over 24 hours. Over the week, though, it is down 10.5%. Over the month, it's down 7.6%. But over the last 3 months, it's still up 164.02%. Looking good. Gold's at $1,822.50. Silver's at $21.19. So they're right around that price in which you can continue to stack. And look, again, I appreciate you guys heading on over to Money Metals. Man, this is awesome. A lot of you have said that Pimpy's convinced me to protect my nest egg, so here I am. And that's what I want you to do, is just be safe. You want something outside of the system. With all the craziness that's going on, it makes it really hard to feel confident about having your money in the bank. And I know that's a scary thought for a lot of people, but I just keep enough money in there to take care of my bills, and that's it. And I'm not saying you have to, but I would suggest that you do that. And with the rest of the money, hold it in gold and silver. And whenever you need it, you can take some of it and sell it back. So here we go. Speaking of, the IMF against making crypto legal tender issues action plan. The whole talk of the town was that cryptos are currency. That's why they're called cryptocurrency. You can use them to make purchases and do whatever you want. I know of people who bought Teslas and expensive cars with their Bitcoin because they got lucky and they got in at the beginning. But right here you can see the International Monetary Fund. They're not going to let anything, and I mean anything, compete with their central bank digital currency. It's not going to happen. Maybe once the people rise up against, the central bank digital currency, and all hell breaks loose, maybe they'll allow cryptos to come back. So for now, let's just look. The International Monetary Fund is recommending that countries not give cryptocurrencies like Bitcoin status as legal tender. You know what? This is how you know that at least Bitcoin has the potential to work as a currency, them and Ethereum, and I don't want to hear about everybody else's cryptos. So the point being, when they're a threat, that's when you hear from some of the big dogs like the IMF and the fact that they're being embraced by Wall Street. I mean, these are good signs. We know that El Salvador made Bitcoin their legal tender, and even though they lost a huge percentage of their value because of the drop, they doubled down. They bought even more Bitcoin. The same with Michael Saylor. The IMF made that point as a part of a 9-point action plan for how countries should treat crypto assets. The financial agency executive board provided guidance to IMF member countries in the discussion of paper, Elements of Effective Policies for Crypto Assets. The IMF said action is necessary after the collapse of several crypto exchanges and assets over the last couple of years. Well, they should have been watching those crypto exchanges a lot closer, is what they should have done. And the regulator should have went to make sure that they had the liquidity necessary to cash everybody out just in case. Because that's how it should be. That's why our banks are screwed like the way they are. All the loans they gave out versus all of our deposits. It's a hot mess. The fact that they only had to keep 10% of their money in the bank and the other 90% was allowed to be lent out. And now it's my understanding that all 100% could be lent out. So very crazy. The top recommendations was to safeguard monetary sovereignty and stability by strengthening monetary policies, frameworks, and do not grant crypto assets official currency or legal tender status. The IMF came out against El Salvador in 2021 when the Central American country became the first to adopt Bitcoin as legal tender. And I thought for sure there would be more countries right behind them. Anybody wanting to circumvent the United States is what I was looking for, to run over there and buy into the whole Bitcoin. It said the Central African Republic has done the same. Oh, wow, I missed that one. So now you got two countries. The IMF also recommended countries establish international arrangements to enhance supervision and enforce regulations, as well as set up ways to monitor crypto's impact on the stability of the global monetary system. You see, that's what they're more concerned about, their money and the effects that crypto could have against their currency, because they know that cryptos would be a lot more accepted by the people than any fiat dollar or any central bank digital currency. So that becomes a threat to the central banks. And that's why I'm saying one of my hesitations about cryptos is, you know, the bankers just aren't going to allow it to happen. They're going to keep going for a little while, but I don't know how much longer. And let's get into a couple of other reasons why you should be careful with cryptos.
Said no longer in a low interest rate environment. Rates have risen dramatically. Tell us, before we talk about the future of the economy, tell us whether or not the decrease or the decline in the Bitcoin price and hence the crypto winter we've seen all throughout last year was a direct result of the Federal Reserve raising interest rates.
So the crypto market is so small that it is easily within a manipulable range. Like if you look at the third largest cryptocurrency, it's Binance right now, right? Binance is at around 47 billion. If you compare that to one of the most volatile stocks in the world, Tesla, which was down as much as 70% over this last 6 months. So a wild stock. Tesla today is at around $450 billion. So the whole crypto market is incredibly small. And as such, it is easy for it to be manipulated. It is easy for it to be held within a range.
Yeah, all it takes is a tweet from Elon Musk and cryptos go crazy.
It is easy for individual actors to affect it. And when you're looking at a global fund inflows and outflows, you'll see that there is a strong correlation between what's happening in the crypto market, perhaps as even a leading indicator of seeing the stock market go down last year, which is one of the worst years in stock market history. So, when you're looking at overlapping those charts, you do see that alignment, but macro isn't as something as straightforward as if you look at this one chart, the CPI, and it goes down, crypto prices will go down 90% of the time. What you can do is have.
So, I mean, actually, that's a good thing. If you know to pay attention to the CPI, if it's going up, then you can expect cryptos to go up as well. So he is tying a correlation between things he has spotted on the markets as indicators on whether or not cryptos will go up and down.
Context, right? And if you look at the context, you'll say, all right, what's happening with interest rates and what's driving interest rates? What drives the interest rates, at least in the United States, and what affects their decisions is inflation, defined as a CPI, the Consumer Price Index, and jobs, unemployment rates, what is job participation rates, things like that. And then if you look at crypto on a kind of crypto macro scale, you look at on-chain analytics. And when you look at on-chain analytics, how much money is flowing into crypto, flowing out of crypto. And then if you dive down deeper, you go to individual coins like Bitcoin and seeing what's happening there. So while you cannot say CPI is up, therefore Bitcoin must be down, what you can say is if you look within a 3 to 6 month time period, you can see that interest rates have increased and how that is affecting inflows and outflows of not just Bitcoin, but all the other cryptocurrencies, which has seen major outflows over the past year. And you can draw kind of hypothesis around that. For example, investors are getting hit and they have to sell their crypto holdings in order to pay off margin loans for what's happening in the stock market.
Yeah, that's what I was going to say. If the stock market's going down, then you could say pretty much that the cryptocurrencies are going to follow their pattern, most likely with a small lag time. You could see that cryptocurrencies would be a lot more sporadic. And the reason why I say that is, although the stock market might rebound, it'll rebound slowly. Once people start to see it slightly move, then people get excited and they jump all over it. So it would have more volatility than regular stock markets. Unlike gold, before we used to be able to make predictions in the past, but with all the manipulation, it hasn't been easy. We just say, we'll keep our gold and we'll add to it regardless.
That's not something where I can point out and say one specific company like a BlackRock, that's happening to them, because on-chain analysis only exists in the crypto world. It doesn't exist in the stock world. But you can certainly see the context and get a better feel for what's happening in the market right now.
But tell us about why you think that low interest rates have helped cryptocurrencies in the past, or is it just all risk assets in general?
It's helped all risk assets in general, but if you look at risk assets, crypto is one of the highest risk assets, right? Because of the upside potential. And when you look at the upside potential, that comes with inherent risk because there's fewer people into anything. The fewer people that are into any asset, the more upside potential it has, because the more people that could invest it in the future, right? That's why it's easy for these small crypto coins to explode like 5,000% in a week, is because it has a daily trading volume of like $500,000 versus some stock markets where the daily trading volume is like, $500 million. And these are some of the smaller stocks. So when you look into, low interest rate environments, it's easier for investors to borrow money and then to take that money and to allocate a portion of it to crypto. And that creates inflow into crypto, which you can track with on-chain analytics. And that enables the prices to rise, because what's a function of any asset class? It's buying versus selling, right? Ultimately, the only thing that matters is how many people want to buy something versus how many people want to sell something. And in a low interest rate environment, you have more buyers of any given asset and less sellers. And it's the opposite way in a higher interest rate environment where people are being more conservative. They're either pulling back and saying, let me put it into a safe place like bonds or savings accounts, where nowadays we're in the world where you can get a savings account from a few places like Ally Bank at 4%, 4% interest savings accounts. I don't think Aave or Compound have anything like that in the DeFi market right now with staking, right?
No, he's wrong. There are some stakers out there that are paying as high as 6%, 8%. That's what I was trying to say. The kudos to cryptos. And another reason why they're being attacked is the fact that they could pay a much higher return interest rates than banks because of all the overhead costs that is related to banking accounts. So, 4% is really good. I mean, I haven't heard that kind of return in a long time, but it's laughable compared to what a lot of these different cryptos are offering people as far as a percentage on return. So yeah, it's a threat to the banks, and that's why the banks are trying to do something about staking, about taking out loans, about borrowing money, about borrowing crypto, all that stuff.
So you're seeing money being pulled back from risk assets and either allocating to safer assets, or you're seeing risk assets being margin called because the prices are going so down that they're being forced to be liquidated in the stock market and in the crypto market. So those are broader things you're seeing right now. And you can kind of track where that's going in the future because the Federal Reserve has interest rates right now around 4.4%. And they've stated as recently as December that they want to move it to around 5.2, 5.5%. So interest rates will keep increasing for the next couple of months. So you can kind of track.
Actually, they want to get it around 6%, 6.6%.
That direction. And if you had tracked what the Federal Reserve has been doing since summer last year, you could have foreseen what was happening in the crypto market.
Okay. Tell us about micro events and their impacts on the Bitcoin price. How significant was FTX, Luna, the Gemini Genesis debacle that we're seeing right now? Which is more important, micro or macro?
Here's the thing about these exchanges that all tanked. Yes, it was bad for cryptos. It gave people a bad taste in their mouth. And we saw several exchanges take a nosedive. But even after all of that, cryptos are still standing. So I'll give them kudos for that.
So when you look at micros are certainly catalysts, right? And when catalysts happen, it drops the price by a lot in a short period of time. What we saw happen was basically Terra got short attacked. It was successful. And when Terra got short attacked, a lot of the major investment funds had significant positions in Terra, like 3 Arrows, which then as a chain reaction took them down. And a lot of traditional CeFi or central companies had investments into 3 Arrows. And so when 3 Arrows went under, it collapsed their balance sheet. And then it caused companies like Voyager to go bankrupt. And it caused BlockFi that needed to be saved from FTX. Otherwise, they would have gone bankrupt. But FTX had a rocky balance sheet too, which is what we saw when the bankruptcy filings came out, right? And so eventually FTX collapsed. And then when they collapsed, they took out a lot of their investments with them.
You know what they all have in common and why they collapsed? Because they didn't have gold as part of their portfolio. All they had was other cryptos. Does that make sense? Because if one crypto goes, they all go. So to have cryptos as your backup to your crypto was like the most stupidest thing I've ever heard. They should have been buying into gold and had a foundation that was secure. If they needed to liquidate, they can do it easily.
So it's a giant chain reaction of events. But as a retail investor at home, it's hard to predict what that will be. And so trying to think through what the next catalyst will be is a very difficult game to play. What you can do is kind of look into the longer 5 to 10 year time period. And then over that time, you can then form a hypothesis of what you think will happen in the future. That is much more straightforward than seeing what's going to happen in the short term, because in the short term, you have these unpredictable catalysts and you have high frequency trading from these really intelligent mathematician PhDs. And it's hard for you as an individual to predict any of that happening. So hopefully that makes sense.
It's funny because these people get down into the nitty gritty when it comes to analyzing things. Really what you could do is just start looking for trends. The average Joe or Joan could just say, okay, every time the market does this, my cryptos will do that. Every time the markets do this, my gold and silver will do that. And you'll start to figure them out. And little by little, you just add more and more to your knowledge until you get it really fine-tuned. and you make the right moves whenever it comes to market prediction. Unfortunately, we had a lot of market manipulation recently, and is done blatantly and openly, and nobody does anything about it. So cryptocurrencies, I still say be concerned. If you're using discretionary funds, and if all your cryptos die tomorrow and it doesn't affect your life, then you got nothing to worry about. But if you mortgaged your house because you heard that Bitcoin is going to go up to $1 million, and now you're upside down and you're going crazy, hang tight and hope that it starts to rebound somewhat so you can recoup some of your money. My concern is that once cryptos start to rebound, people get excited. And when they get even, instead of taking the money out and being happy that they didn't lose anything, they're going to start to sit back and watch the market and go, well, maybe this time around it'll be different. And then they'll lose everything again. So just hang tight. We'll watch the crypto markets. I watch them closely. I'm not a fan, but we'll see where cryptos are once the dust settles, okay? But for those of you that are running over to money metals, congratulations. I'm excited for you. And I hope that more of you decide to do the same. That's it for now. I'll get at you later. I'm out.